We'll review 10 of the best stocks in this video that will increase your wealth and make you richer in 2023. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. Investors will probably remember 2022 as one of the most difficult and challenging years in history. All three of the most popular stock market indexes, the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite, which is based on growth stocks, have fallen by between 22% and 38% at their worst points. Many people find that big drops in the market can make them feel bad and test their resolve to stay invested. But history is quite clear that putting money to work during bear market declines is a smart move. Every important correction and bear market in history has been left in the dust by a bull market rally at some point. This means 2023 could represent a new beginning for long-term investors, and all the more reason to go shopping. Let's review our 10 top stocks that boost your wealth and make you richer in 2023. Number 1. Meta Platforms, ticker, META. First up is the world's leading social media stock, Meta Platforms. Despite having a miserable year, the concerns about Meta's ad revenue and spending on the metaverse appear overblown, which sets the company up nicely for a solid bounce in 2023. Meta is the parent company of Facebook, Instagram, WhatsApp, and Facebook Messenger, which are four of the most popular social media sites in the world. By the end of October 2022, 3.65 billion people worldwide will have visited at least one of these sites each month. That's more than half the world's adult population. Even though the economy has been bad at home and abroad, the number of monthly active users on Meta has continued to grow. Advertisers are well aware that there's no platform on the planet that gives them a better chance to reach audiences with their message than Meta-owned assets. The other thing to consider is that Meta has the liberty to spend aggressively on the metaverse thanks to the $40.5 billion in cash equivalents and marketable securities on its balance sheet, as well as the $58.5 billion in operating cash flow over the trailing 12-month (TTM) period. Meta wants to set itself up as a key entry point to the metaverse, which could be worth a lot of money. This is a company that has a lot of cash reserves that can easily spend on high-growth projects while still making a lot of money. Number 2. Enterprise Products Partners, ticker, EPD. A second top stock that can make you richer in the upcoming year is the oil and gas company Enterprise Products Partners. Enterprise pays a whopper of a dividend 7.5%, and it's boosted its base annual payout for 24 consecutive years. While some of you might be worried about investing in oil stocks as chatter about a US recession swirls, Enterprise Products Partners can sidestep these concerns. That's because it's a midstream operator. It controls more than 50,000 miles of transmission pipeline, 24 natural gas processing facilities, and can store 14 billion cubic feet of natural gas. Midstream operators lean on fixed fee or volume-based contracts, which makes their operating cash flow quite predictable, no matter how volatile oil and natural gas spot prices are. Additionally, the global energy complex is broken, or at the very least impaired. During the recession, capital investments dropped by a lot, and Russia's invasion of Ukraine has made it harder for some parts of Europe to get oil and gas. With no immediate global supply fix, energy commodity prices should remain above average. This is good news for midstream operators like Enterprise Products Partners because it is likely to increase domestic drilling. Number 3. MasterCard, ticker, MA. Payment processor MasterCard is another rock-solid stock that has a good chance to make investors richer in 2023. For most companies, historically high inflation is a headwind. But for a company like MasterCard, whose business is based on fees generated from payments put on credit cards, inflation can be a tailwind. No amount of inflation will deter consumers from purchasing basic necessities. Also, people may use credit cards more often in the near future if prices keep going up. The fact that MasterCard is careful with its money is a second reason to think that shares will go up in 2023 after a rough year in 2022. Even though the company would probably do well as a lender, the people in charge have only done payment processing. By choosing to avoid lending, MasterCard doesn't have to worry about setting aside capital to cover loan losses. MasterCard's profit margin is well above 40% because it does not need just-in-case money to cover loan losses. Number 4. Berkshire Hathaway, ticker, BRK.A, and BRK.B. Billionaire Warren Buffett isn't infallible, but he's been virtually unstoppable over long periods of time as CEO of conglomerate Berkshire Hathaway. Over his 57 years as CEO, Buffett has overseen a 20.1% annual average return for his company's Class A shares, BRK.A. That type of track record certainly makes Berkshire an attractive holding for 2023. The Oracle of Omaha's success has to do with two key aspects of Berkshire's investment portfolio. First of all, it is stacked with cyclical stocks, or companies whose fortunes fluctuate in line with the state of the American economy. Even though recessions are unavoidable, Buffett is smart enough to know that times of growth last much longer. He's positioned Berkshire Hathaway to take advantage of these long-running bull markets. The second factor helping Berkshire Hathaway is Buffett's love of dividend stocks. Over the coming 12 months, Buffett's company should collect nearly $6 billion in dividend income. Dividend stocks are almost always profitable and time-tested. Better yet, they have a history of substantially outperforming companies that don't offer a dividend, which is what makes them a smart hold for patient investors. Number 5. NextEra Energy, ticker, NEE. Electric utility stock NextEra Energy is a fifth top stock with everything needed to make you richer in 2023. When dividends are taken into account, NextEra has given its shareholders a positive total return in 19 of the last 20 years. The greatest thing about utility stocks is the predictability of their operating models. In NextEra Energy's case, its customers don't change their electricity consumption habits much from one year to the next. It is important for a company to be able to accurately predict its annual cash flow. This lets the company spend money on new projects, acquisitions, and dividends without hurting its profits. But what really tends to set NextEra Energy apart from every other electric utility stock is its focus on green energy projects. No electric utility in the country is generating more capacity from wind or solar power. With oil and natural gas prices well above average, the cost savings of leaning on renewable energy really stands out for NextEra Energy. Whereas most utilities are slow growing, NextEra's green energy focus should help it sustain a high single-digit earnings growth rate. Number 6. United Health Group, ticker, UNH. The healthcare giant United Health Group is another company that has never failed to make investors more money. Inclusive of its dividend, United Health has produced 18 positive returns for its shareholders over the past 2 decades. One of the things that make United Health Group tick is its insurance operations. Insurance isn't a fast-growing operating segment, but it usually generates predictable cash flow. Because catastrophe events that lead to higher payouts are an inevitability for insurance companies, they often have little trouble passing along higher premiums to the individuals and businesses that hold policies. But insurance is just one reason for United Health Group's long-term outperformance. A lot of the credit goes to Optum, the company's healthcare services subsidiary, which is growing organically faster than the insurance segment and also has a higher operating margin. Optum offers a wide range of services, such as software used by healthcare organizations and prescription refills for hospitals. Number 7. PayPal Holdings, PYPL. PayPal enables digital and mobile payments on behalf of consumers and merchants worldwide through its namesake platform, Venmo, and more. PayPal also announced a new strategic partnership with tech giant Apple that will allow the Fintech company's merchants and consumers to utilize Apple Pay at checkout in various ways. Even though some PayPal users are feeling the sting of high inflation, the company's key performance indicators continue to impress. For example, when 2020 came to a close, the average active PayPal account holder was conducting almost 41 transactions on a TTM basis. But as of the end of June 2022, the average active account was completing close to 49 transactions over a TTM period. This shows that PayPal users are becoming more involved over time, even though the economy is hard right now. Since most of the company's income comes from transactions, having a more engaged user base is important for steady earnings growth. PayPal is also historically inexpensive. Taking into account recently announced initiatives to reduce its annual operating expenses by at least $1.3 billion in 2023, as well as the company's $15 billion share buyback program. PayPal looks like a veritable steal of a deal at less than 22 times Wall Street's forecast earnings next year. Number 8. Chevron Corporation, ticker, CVX. Chevron Corporation, an American multinational energy giant, is one of the best American stocks to buy for 2023. The company posted market-beating Q3 results, with free cash flow of $12.3 billion. The revenue of $66.64 billion jumped 49.0% year-over-year, beating analyst consensus by $5.2 billion. In October of 2022, Cowen analyst Charles Rhyheye raised the price target on Chevron Corporation to $185 from $160 and kept an outperform rating on the shares. The analyst observed that 2023 capex was guided to the high end of the midterm range while 2022 Permian growth was guided to the low end of the range. He noted that Chevron Corporation reaffirmed a disciplined approach to M&A and share repurchases despite an ever-improving balance sheet. Number 9. NVIDIA Corporation, ticker, NVDA. NVIDIA Corporation is one of the leading American semiconductor firms. On November 8, 2022, NVIDIA Corporation announced that it had launched a new chip in China that complies with the recently introduced U.S. export rules. The A800 chip is the first such processor from a U.S. semiconductor maker that adheres to new trade rules. In October of 2022, investment advisory Needham reiterated a buy recommendation on NVIDIA Corporation but lowered the firm's price target on the shares to $155 from $170 as part of a broader research note on semiconductors and semiconductor equipment. Number 10. J.P. Morgan Chase & Company, ticker, JPM. J.P. Morgan Chase & Company is a New York-based financial services company that operates through 4 segments: consumer and community banking, corporate and investment bank, commercial banking, and asset and wealth management. On October 14, J.P. Morgan Chase & Company posted a Q3 GAAP EPS of $3.12 and a revenue of $32.72 billion, outperforming Wall Street estimates by 23 cents and $840 million, respectively. On October 17, 2022, Citi analyst Keith Horowitz reiterated a buy rating on J.P. Morgan Chase & Company with a $135 price target following the company's Q3 results. The analyst said the bank is hitting on all cylinders and that present share levels offer an excellent entry point for a quality franchise. According to Insider Monkey's data, 104 hedge funds were bullish on J.P. Morgan Chase & Company at the end of Q2 2022, compared to 110 funds in the earlier quarter. J.P. Morgan Chase & Company is one of the best American stocks to buy for 2023 according to elite investors. Which of these stocks would you consider adding to your investment portfolio in 2023? Let us know in the comments below. Don't forget to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching and happy investing.